Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And tonight, we have a great subject matter to go over because there is a candidate running for president that has talked about unrealized capital gains on the wealthy. But a lot of people are confused because you already pay unrealized capital gains on certain things, but you don't realize it because you just take it as status quo. But it's okay. It does not really matter. We're going to get into it tonight because you do pay capital gains. And a lot of people know when you buy and sell stocks, real estate, and almost anything else. It could be wealth like artwork. It's a lot of things that you're going to pay capital gains on. But most people, they're happy when it's unrealized capital gains. So what does that mean? We'll get into it. So stay tuned here, ladies and gentlemen, and make sure you go down below in the description box if you're on YouTube to go check it out. All right? So just keep that in mind. And I almost forgot the guys on Instagram. I forgot about them. Welcome to the SSN Nation as well. And Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right. Welcome back, ladies and gentlemen. And once again, thank you so much for being here. Please share the videos. Why? Because other people are out here getting misinformation. You have to do what you should be doing with anything. Research it on your own self. Make sure you do the research and you go to several different independent sources. That's what you should be doing when you make an investment in anything, let alone information. Because information these days, let's just say some people have a reason to say things. So I have a reason to say something. You may have a different reason, but it does not matter when facts will not change. So let's get into it. Down below in the description box, you will find, if you want to get free stocks from Robinhood and or Webull, use the links down below in the description box. Also, let me see who's in the house tonight. Laverne Penix is here. Welcome to the SSN Nation Financial Friday night live stream with that icon I humbly appreciate. Thank you so much for that. And he brings his tagline this evening. Hello, SSN Nation. I hope everyone is doing well. I received the notification and saw the trailer. Thank you so much for that. Thank you for letting me know he's the first one in the house. And chat rooms open to everybody. The other part is, right now you see Laverne Penix on the screen. But in this YouTube street, he's known as Mr. Cool in this house, ladies and gentlemen. So once again, thank you so much for being here. Very nice to see you. And oh my, it is Maria Barnes in the house. Welcome to the SSN Nation Financial Friday night live stream. And ladies and gentlemen, our tagline is, hello, Eric and SSN family. How is everyone doing? Everyone is doing well. I got the notification and saw the trailer as well. That is awesome. That's two people. And once again, Maria Barnes is Mrs. Cole, ladies and gentlemen. That's right. She's in the house tonight and getting ready to go over to Spain shortly in a couple of weeks, which is going to be awesome. And I want to hear about this Alicante place because you guys aren't the only ones that have mentioned this. Even Victor Marrero mentioned it. I've had a couple of other friends that is not even on SSN Nation mention it. I'm like, what's so special about this area? We got to find out. So glad to hear that you're doing well. Very happy to see you once again in the house. Victor Marrero, The retiree is here. He's also going over there to Spain. Welcome to the SSN Nation Financial Friday Night live stream with that icon next to his name, which I humbly appreciate. And he brings his tagline, hello all, let's do this. That's what we do, Victor Morel, getting everybody on track so they understand what they have to do. But the bottom line is, it's unrealized capital gains tax. Oh my God, people are freaking out, thinking they have extra taxes to pay. Well, first of all, since Victor Marrero's here, none of us here watching this tonight have $100 million in asset class. We don't have $100 million worth of anything. So what do you need? $100 million worth of real estate? That's what you need. $100 million worth of stocks. That's what you need. It's not your net worth. It's you need $100+ million worth of an asset. Now, I want to ask somebody, since we have a lot of smart people here in the SSN Nation, when we start talking about this unrealized capital gains tax that a candidate wants to, well, they put it out there. Let's just put it this way. Apparently, people do not understand how much money is money. Because I don't think people realize when somebody has $1 billion, the reason why these guys spend millions of dollars on stuff like it's water, it's because it's $1,000 million. That's a billion. That's 1 billion. So when somebody says I'm spending 15, they're a billionaire and they're spending 25 million on a yacht, that's 25 out of the 1,000. So they still have 975 left millions. So you see why it's not a big deal once you reach that level. But here's what's the big deal when you reach that level. So they just spent $15 million, or shall I say, in my example, $25 million. And what happens? They still have 975 millions left. So here's what also happens in reverse. What happens if they earned 10%? Okay, so you know it's 1,000 million. So 10% is 100 million. Okay, now do you understand? So $1 billion is $1,000 million. Okay, 10% that they earned by keeping their money in an index fund just for 1 year, which why would you do that when you can earn more than 8 or 9% or 10? But let's just say they do. That's $100 million. Are you guys getting this? Okay, so here's the problem I have. So they took 10%. They earned $100 million. Fair enough. They earned it. Great. They left it there, right? You do what Warren Buffett does and all the rest. You're not taking it out. But here's the thing. Let's just say I invested. Let's just say we all started out, not us, but the guy started out with $40 million, $50 million, and then just kept their money in there. Do you understand they would owe over 950 million if they cashed out, would be subject to capital gains at 25% normally, right? Okay. So again, that is crazy. Actually, I'm sorry, 15%, because they didn't do it within 1 year. They didn't earn it within 1 year. They cashed out years later. So they're going to do 15% on $950 million. Let's just say that's what happens, right? So this whole time, as it's riding up, you know what I get to do? I get to do what they do. I get to call up and say, hey, man, I have $600 million worth of shares. Can I get a loan for $50 million because I want to go buy this corporation over here so I can make more money. Now, remember, you're not taxing anything. So I'll get into it shortly because we're going to get an article about this. And we're going to just pay attention, ladies and gentlemen. And I will say this, for your sake, ordinary citizens, the OC's sake, I'm going to tell you up front, I am pro unrealized capital gains tax if you have $100 million of an asset class sitting there, whatever they deem the asset class. We know it's going to be stocks. It's probably going to be real estate. I haven't seen the actual thing, but it has to be something that you hold traditionally. Artwork, things of this nature, because there's artwork that's worth over $100 million. I mean, it's crazy out here. All right. Victor Morrell says, good point. Can't listen to any of the media anymore, left or right. You need to do your own independent research. I say pick up the book. Exactly. Pick up the book. You know what's even funnier? Pick up the book that was made. This is something this is what I used to tell the teachers when I was in class. And I'd say, it's kind of funny how things evolve over time, but the same principles don't change. So if I pick up a book in 1970 and if you picked up an inflation book in 1970 and you started reading it and then you go and they start telling you, this is how inflation happens, right? And then you apply the same principles till today and you'll be like, oh, hell no, we don't want that. That increases inflation. The same rules apply, except it's on steroids now. Because back then, they didn't have what we have now. There's tax cuts and tax breaks and all this because the rich they had a corporate tax of 50%, 60%, 71% for their marginal rates. So the rich couldn't do this crazy stuff they can do now. So then you would understand, if you pick up an older book, then you would be understanding, well, wait a minute. What do you mean? What do you mean these guys have a corporate tax rate of 21%? It used to be 70. What the hell is going on around here? You would think you woke up in the twilight zone. And then when I tell you, because I came along with you and I came to the future in advance, as soon as you arrived and I said, hey man, guess what else? Not only is the corporate tax rate like 21%, but can you believe these guys, after they don't have to pay the 70% tax, can you believe they can borrow against it to go buy something else? And because they use that to go buy something else, they don't have to pay tax on that either. They would be like, have you lost your mind? I'd say, no, man. Welcome to the future. Did you bring any millions with you? I'm like, what the hell's going on? Good point. All right. So anyhow, once you understand the past, the future you will understand is a travesty. So, and then you'll be understanding what they've been able to do over the last 50 years and who's they. They is the same guys that will tell you, I don't want you to do this, are the same guys on social media right now saying it's bad. It's not going to be good. It's going to crash the markets. And I say, okay, how come it didn't crash the markets in 1950, 60, and 70? When you guys were paying 3 to almost 4 times as much in taxes for the amount of money you owe. What happened? The middle class was booming. I wonder why that happened, because we didn't have to pay for your guys' free lunch. That's why. That's what happened. Once you understand that, I'm from the old school. I'm not from this new school. Making sure once you're rich that you put the taxes that you're supposed to pay on the back of the people who make less money. That's literally what this is. Joe Nay, another investor's here. Welcome to the SSN Nation Friday night live stream with that icon I greatly appreciate. And he says his tagline, good evening, SSN Nation. I'm feeling great. I hope everybody is feeling great. Also, I'm feeling great. You feeling great. The rest of the nation's feeling great. And oh, by the way, I have the Mother Jones article about unrealized capital gains by the candidate Harris. I'll just say her name because everybody knows who it is. It says you don't have to worry about it. You know why? Because again, I already started off. You have to have $100 million worth of an asset. So in other words, your stock brokerage account has to hold more than $100 million. Okay, just to be clear, there's only 30,000, well, a little under, but 30,000 Americans that this could even apply to, could possibly apply to. Why do I say possibly? Because you have to have $100 million plus. So that could fluctuate. But in reality, according to the estimates, it only matters for 9,000 people. A little over 9,000 people out of the whole population. And that's what's a travesty. 9,000 people own more wealth than 80% of the population. Oh, yeah, I know. You guys the stats don't lie. So this is why if you're a person that's trying to pay down on the deficit, why would you not go to where a guy who gets 10% increase in price earns hundreds of millions of dollars? They didn't have to work for it, which is not anything bad to say. They took the risk to invest because, you take a risk. But the fact of the matter is, it's different. If you make $50,000 and you get a 10% increase, all you get is $5,000 if you invested $50,000. But there's a whole different ball game if you invest $500 million. That's $5 million, which is great for both parties. But if somebody tells me, hey, Eric, that $500 million guy, you got to give him a tax cut and you're going to pay his taxes that he owes. And I'm like, well, wait, doesn't he owe like at least 10% in taxes? It's like, yes. Well, then that's like he has $50 million. So $5 million, me and the other 300 million Americans have to pay his fair share along with the other 9,000 people. This is what we're talking about here. So when you start you guys don't realize it ends up being trillions of dollars. And so now 300 million taxpayers are paying trillions of dollars in taxes that they didn't have to pay because you decided, oh yeah, just give them a tax cut. Okay, fine. But now I have to pay my taxes. So now I'm paying their taxes and my taxes, and we don't have enough revenue for our country. So now we are running a deficit. And here's the last one you guys know. We also give them subsidies. These same guys who own the corporations are getting subsidies in the billions of dollars. Remember, billions of dollars. $1,000 million is a billion. That's what they're getting in subsidies to run their corporations that you're giving them tax cuts for. And you're paying that too. And I won't even get into bonds and all this other stuff. So again, here we go. Here we go. We got conversation. It's going to go down. I got the notification, says Joe Nay, saw the trailer and just the fist, smash the like button. I love it. Thank you so much for that. Mo Better is in the house. Welcome to the SSN Nation Financial Friday Night Live Stream. And he says, what's up, SSN Nation, to make his tagline important in the house. Yahweh, Jay, Mo Better, both investors all here. They have an interest in this. You have an interest in the unrealized capital gains tax, but nobody's holding $100 million in their brokerage account that's here tonight. Yahweh J, welcome to the Financial Friday Night Live Stream, SSN Nation style. And he brings his tagline, hello, SSN Nation. Happy Friday, everyone. Happy Friday to you and the wife, man. Tell her hello, receive notifications, saw trailer, and smash the like button for the trifecta, just like Joe Nay. I appreciate it. Mo Better, he says, what's up, E? Just Hulk. He smashed the like button on the way in as well. That's what we like, ladies and gentlemen. Make sure you share the videos. Mo is on the side of the rich guys. It's bad, is what he says. He's on their side. He wants them to not be taxed unrealized capital gains after they have accumulated $100 million in their brokerage account, has $100 million sitting in the bank, has $100 million worth of homes that they bought. Wait. Those homes that corporations are buying, wasn't it Americans for Rental or Americans for Rent? JP Morgan already gave them $250 million to buy homes in Atlanta. They have $250 million worth of homes, ladies and gentlemen. Wouldn't it have been nice if they would have had to kick down 28% of that $258 million to help infrastructure, help pay for the deficit, get some new lights in the city and all this other stuff? That'd be cool. If you're going to go this route, maybe that's what it's for. Some smart people are thinking. They're like, hold on a second. We can kill two birds with one stone. You guys want to go out here and buy up homes? Okay, go do it. We know how much you're buying them for, so you don't get to do none of this hocus pocus accounting. You don't get to do we bought $1 billion worth of homes, but really, after we do our accounting, we get to slash stuff. It's like, hold on now. I'm sorry. You bought $1 billion worth of homes. Break us off our 28%. And here's the other factor. We live in America. If you want to play in America, you pretty much have to bank in America. So some people would say, well, they're not going to pay. I'm going to tell you what, they're not going to be able to do anything because every time they do a transaction, it's going to be intercepted by the United States government. You're not going to be able, what are you going to do? You're going to wire money to pay for it? It ain't like you're going to be able to move $200 million like a drug dealer. You have to move it. So as soon as you say, wire this $250 million to these guys, intercept, held up, sorry, ain't happening. So think about it, ladies and gentlemen. All right, guess what? Victor Morrell says Yield Max ETFs will start paying weekly, effective 18th of September. Weekly? Oh my God, ladies and gentlemen. Victor Morrell, thank you so much. Yield Max ETFs, dividend investing at its finest. You want 10%? You want 15%? Well, then you might want to stick with ORC, ARR, PSEC. If you want 25, 35, 45, 50% return dividend-wise on your investment, then you better go to yieldmaxetfs.com. You heard me, yieldmaxetfs.com. Go study, though. They do something different that has come out in the last 2 to 3 years, option income strategy layered with a particular stock, treasuries. You got to read it, but it's hard to pass up when somebody's going to pay you now weekly instead of monthly. The compound is going to be off the charts. Can you imagine somebody getting 30 cents a share every week? It ends up being $1, $1.20, $1.30 or something. And the next thing you know, you have 1,000 shares. The compound every week, though, that changes the dynamics altogether, because that is insane. That is insane. That means you have a curve that goes like this. Holy smokes. Wow, this is great news. Doing the salsa dance, you got that right. You can compound quicker. He's done hit it right on the head already. Of course. I have a lot of smart people in here. Mo Better. Here's what we got. He says unrealized capital gains. Hold on. I missed it. What happened? All right. Unrealized capital gains, which are primary source of income for many extremely wealthy households, are mere paper gains that do not constitute real income. This is bad. Why is it bad? It's not bad. You haven't explained why it's bad. First of all, you have to have $100 million. It would be bad if it was on ordinary citizens, but here, hold on. It's bad for ordinary citizens already, like I said. So it's not paper. And okay, let's do it this way. It is paper. It is a derivative, but that paper is not the same paper that I'm holding right here. It's paper. It's thin air. So if I have this piece of paper and I tell you, hey, man, this is $300 million, you would laugh. You'd be like, what are you talking about? But it ain't going to be funny when I sit there and say, hey, man, I want to buy Boeing. I want to buy Boeing. And then I say, hey, this $300 million worth of assets that I have, can I go down and I need 50, $100 million right now. Boeing's going to be a lot more expensive than that. But I'm just saying, using an example. I need 300 million. So I can go buy Boeing over here. Okay. This is the problem. Because again, you have to cut off some other part of the economic system in order for them to get what the monies that they've received. So they receive tax cut, tax breaks, subsidies for their corporations, and tax cut, tax break for their corporations and individually. So we're paying all these trillions of dollars, by the way, the ordinary citizen. So these guys got an advantage. So that advantage allows them that they're holding 600 million, 500 million in an account, 10% annually gives them $60 million. But they get hundreds of millions of dollars in a lower tax bracket, in a subsidy, in a tax cut, in a tax break, and other things. Because you're in business, you get tax write-offs versus a person that earns W-2 wages. So again, I don't see how it's bad because they have an advantage because our tax code is built for them to have an advantage. So we're going to find out. Mo says, he says, no, that would mark a radical departure from current tax bracket. Exactly. Because what everybody doesn't understand is every time you're ticking the deficit up, there's interest owed on the deficit, which goes to the tax-paying people, which is 1.2 trillion this month. So who's going to pay this back? It's the backs of the ordinary citizens. So again, the deficit's rising, 1.2 trillion a month right now. Now who's going to pay that back? So you guys are going to tell me it's good that they get tax cuts, tax breaks, subsidies. We have to pay for the subsidies, the tax cuts, the tax breaks, bonds, and we also have to pay for this last thing too, the deficit of 1.2 trillion in interest, not the principal, interest. So now everybody born and everybody in the future that's born is going to be contributing to this 1.2 trillion a month. What are you going to do? Keep doing the same thing that started in 1980? In the last 50 years? Why? Why wouldn't you just, for me, I just say, okay, just make it 1950, 1960 tax schedules. Just do that. Just do any of that, 50s, 60s, or 70s. I'll take that then. I'll take that. So you guys can pay the 70%, 71%, 50, 60% marginal tax rate. The rich guys. We can go that route. I'll take that route then. If you don't want to take this route, then take the other route. But that's how you're going to pay this $1.2 trillion every month that's due. And that's how you're going to pay the balance, the other 35 trillion. That's how you're going to pay it back. Because you're not going to be able to get it from the bottom 80% of the population when the bottom 80% of the population makes only a few trillion dollars. The top 20% of the population is making tens of trillions. Unrealized too. So this is what's going on. And if you're smart as an economic person, what are you going to do? You're just going to sit there and keep adding, where now you put your currency in worse jeopardy. Your citizens are now living paycheck to paycheck right now at 70 to 80% of our population. Insurance companies have to pay more or need more money for less people. So your insurance rates are going up because they're not going to insure risky people. Healthcare is going to keep rising. That's unsustainable. You can't keep paying more and more for healthcare and insurance. And you're giving those same companies tax cut, tax break subsidies. Medical hospitals, tax cut, tax break subsidies. All that is piled up on your side, our side of the fence. And the deficit's rising. Meanwhile, we have 10,000 United States citizens that have $100 million or more sitting in a brokerage account or worth of real estate, with corporations owning trillions of dollars worth of assets sitting around, charging us, higher rents to boot. Crazy. But you're giving those same companies tax cut, tax breaks, subsidies. This doesn't even make any sense. Where the individuals are paying tax cut, tax breaks for an individual that owns the company and the company that they own. That's crazy to me. And all these people, you guys seriously want to give these guys a break after they have $100 million that in an asset class, which generally means they're probably billionaires. And so a billionaire, as I already said, has 1,000 millions. So are you serious right now? So it's like a big whoop-de-doo that they're going to pay $28 million, $40 million, $50 million. Hell, they go out here and buy jets and yachts for more than that. Let's get real. Down in Miami, just this past week, 2 of the most expensive high-rise condos on a pre-construction project just got purchased. $150 million for both. I don't know if they were separate, but let's just say they were both $75 million. The person who bought these 2 condos for $75 million clearly probably has $100 million sitting somewhere else, because if they can spend $75 million on dirt, waiting another 2.5 years for it to be built, clearly they probably have $100 million sitting somewhere else. So this is the situation that we find ourselves in. And this radical departure, I'm here for it, but it ain't going to happen. The rich have lawyers that will find loopholes to avoid all this. No, they won't. So see, that's the thing. That's the point. So once you set a number, you're not going to avoid it. That's the point. So if you say you have $100 million in your brokerage account, you know what that means? That means you let that sit there. Remember the situation with the $600 that they were going to tax people and all that, sending it? Okay. So you know if somebody has $120 million sitting in their brokerage account, you know the government is going to do what they do. They're going to go in and say, okay, man, take the 28%. They're not going to ask. Why would they ask? The number's already built in. So what they're going to do is they're going to try to avoid that, which, right, they're going to say, okay, we're going to do things like, and this is funny to think about. Think about this. What would you do? If you're going to avoid this, you're going to do what everybody does when they say, oh, there's no tracking. If I pay $9,900 and under, there's no report to the IRS, which people don't realize they report to the IRS anyhow. It's suspicious activity. That's what they do. Suspicious activity report, SARS. It doesn't matter. Your account has $500, $700, $1,000 a month going in and out, and all of a sudden you have 8,000 that you're sending. That triggers a SARS. But anyhow, the point I'm trying to make is the SARS will be triggered anyhow. This already happened when I used to play poker. This already happened when they told the casinos, oh, hold on, man, you got to do some withholdings, because the same rules applied. I roll in the place, go to the cage, I buy $2,000 worth of chips. I go play a few cash games, win like 1,000. I leave. I have 3 grand on me. I go and enter a tournament, $1,000, $1,500. I finish in the top final table. I get like 20 million. I mean, 20,000, 15,000. Okay. In the old days, they would give us chips. So it's untrackable, untraceable. But the new days, no. They're like, no, no. We have to report that we gave you what you gave us and then what we gave out. We're reporting it to the IRS. So whether they give me chips or cash, it don't matter anymore. See, those are the differences. So they changed up in the gambling world, at least for poker and things like that, and probably all over in the gambling. But now they're saying, well, wait a minute. These guys are sitting here earning on the backs of the American people. You're not paying us livable wages. But let's just go with what I would start off with first. What happens if I just keep 990 million? I'm sorry. Yeah, that's not right. 990 million. 99 million in an account. So we can play this little game. 99 million. Fine. Let's just say I keep doing what people do with getting LLCs, C corps, and buying real estate. Let's just say every time, we just keep buying LLCs. Okay. So what's going to end up happening? All of this transactions that they are doing that are over $100 million when they buy assets. So they're not going to buy assets anymore is what you're saying. Because if you say, okay, Eric, we'll just buy $20 million places. We'll buy $10 million places. Oh, come on. These guys all have big cojones. They don't play like that. They always want to be the shining superstar. They want to be the best billionaire, millionaires, or whatever. There's a competition, so to speak. So let's just say, though, there's no competition, no ego, and everybody does this. Oh, yeah, we'll just keep all this stuff in an LLC at 99, 90 million, 80 million. Okay, well, then I guess nobody's going to be buying corporations anymore. For one, I guess nobody's going to be buying $100 million homes anymore either. And I guess nobody's going to be buying 2, 3, 4, 5 homes worth 20, 30, $50 million either. So all of this stuff is going to add up. I guess art, might as well forget about it. There won't be any crazy art prices. So all I'm saying is you expect rich people to do that, especially when they're not even from here. You expect now the guys from Dubai and Middle East with all the oil money, they're just going to sit there and be like, yeah, man. Yeah, we ain't going to buy no $75, $100 million condos and homes and stuff like that. Are you serious right now? They're going to keep buying. They're not going to care about 28%. Seriously, that's not even a penalty. That's a capital gains normally for 1 year transactions, 25%. So they're already subject to that. So 3% more, whoop-de-doo. They're not going to care about this. They're going to say they're going to care about it right now, but it's only 3% more than a 1 year capital gain tax. So what's the big deal? That's all I'm saying. It's not that big of a deal. We're getting an interest cut next week, but then turning around and potentially shut down the government 30th of September. We can't win. Our pensions are part of that shutdown. Speak on it, Victor Marrero. Speak on it. Speak on it. Exactly. Exactly. See, this right here, another situation that's coming up. Another situation. I've been loading up on DRCR, BTBT, IQST. Okay. All these right here, people can go do their own research. One I know is like a PIN. One's for PIN gaming is DRCR. BTBT, that's popular. IQST, not familiar. But as we do here, that's why you need your pen, pad, and paper. Now, I'm going to stop for a second. I'm going to play a new SSN lifestyle video. This right here, since I'm doing story nights on Friday nights now for the next I don't know, 100 times. So I have to keep my story short because I have more than 100. But here goes one for 100. Here comes one. I started talking about this last week. I was going through some emails and I found something from a photographer named David Robertson. Apparently, he was at the Playboy Mansion another time when I'm there. I can't really tell when this is, though, because the email is from 2007. So maybe that's when it is. Um, and he would post for the Getty images. So then people would buy images and things like that. So there's some, let's just say, celebrities, famous people that were there and at the tables or walking around. I can't remember everybody's names though, because I haven't been in the poker world for a long, long time. It's been like 14, 15, 16, 13, 14. No, it's been a while. So at least 14 years I haven't been really playing poker at the poker tables with any of the pro players. So I'm like looking at stuff like, is that I can't remember everybody's names. But anyhow, here we go. I'm going to play this right now. But yeah, Victor Morrell, that, and you know what's funny? The senators, representatives, they will not cut their pay. They'll cut the federal employees. They'll cut mom and pops, but they'll make sure that they still get paid if there's a shutdown, which is crazy, which is real, real crazy. I'm waiting for the party that says, hey, if you shut down, there's no more for us either. But they won't do that. That's crazy. All right. So anyhow, this video is something different. And then I found some other pictures. So it's sketchy. So let's just say, like I said, back in the day, there was none of this social media. So there was no reason to keep that many pictures and do stuff. So I wasn't one of those type guys, even though people had cameras all over the place. I wasn't like, hey, let's do this, let's do that. So this guy, Dave Robertson's walking around, took some pics while I'm walking around. I didn't even know the guy. And so he sent me an email and he sent these pictures that you'll see. And then of course, I added something else in at the beginning. So we'll go with this. Let's check it out.
Come on, come on.
All right, ladies and gentlemen, a short one. There it is. All right. So Grand Canyon, if you haven't been there, you should always check it out. It is wild. There is stuff on the range in the middle of nowhere that at one time people actually lived in these little huts on the cliff edge, on the cliff. It's crazy. The place is huge. If you've never been there, it is not anything to be played with. It is deep, majestic, beautiful, and a lot of history. And I like a little history every now and then. So you could be there for a week, at least a week. It's crazy. It's bigger than you think. I mean, it's ridiculous. It's beautiful. All right. So let's go with the SSN lifestyle. I'll give you parts of the story. We'll get back into this at the end. Okay. Yes, I'm at the final table. All right. All right. I could play poker at the time. All right. We're at the final table. Who's at the final table is, okay, Steve Daneman. He was a guy in the purple shirt, didn't show his face because the names were blocking it. He ended up second at the World Series of Poker, second place in the main event. The guy next to him, Terrence Chan, he actually cashed, I think it was that summer. It must have been, I think it was either, because I was there. It was either 2006 or 2005. Terrence Chan is next to him. He cashed in 2005 at the first time for the World Series of Poker. Shannon Elizabeth, you can't see her. The girl that's in American Pie, she's to my left. Cousin all kind of havoc, like I've told you before. She's not a very nice person. I'll put it that way. She wasn't too cool, and that may be why she's not in really doing much Hollywood ever since for about 10 or 15 years. The two guys across from me, older guys, one guy's from Italy and another guy, I can't remember their name. It was like one guy's name was like Rosalini or something like that. He's wearing the glasses. Another guy is an old school poker player from the 70s that won some bracelets. We're all at the final table, and then some unknown people that I didn't know, like 2-3 guys. Then before we get to the final table, Jennifer Tilly, which also is in movies and TV. People might know who she is. Phil Locke, known as the Unabomber on World Poker Tour. He was there. He got busted out. And there's probably somebody. Oh, Marcel Loos, the Flying Dutchman. All right. So me, Marcel, we still talk. Phil Locke and Jen, we don't talk. Terrence Chan, I talked to him about 4 years ago was the last time, because he actually asked me, because he got in a thing at the final table. He finished up, Steve Danneman won, Terrence Chan finished second. And whatever they did, they split. And I didn't know this because Card Player TV was where people used to get was like an ESPN type thing. If you played poker, that's where you would get videos. So I'm over here doing the interview after I bust out with David Singer. And David Singer isn't even with Card Player TV. He's an actual poker pro. So when he brings the mic up, hey, Eric, man, what's up, man? Congratulations, you made the final table. Yeah, you busted out early. A shame you had that bad beat, whatever. I'm doing the Card Player interview right now. So there is tape out there somewhere. But Card Player TV, they lost their all their videos online at one time. Something happened like 10, 12 years ago. So it may surface one of these days, which I doubt, but that's who's interviewing me, and that interview somewhere in ether, somewhere. I don't have it. So, well, I might have it, because back then I used to have copies of stuff, because somebody told me, did you see your interview on Card Player? Because I didn't know. I didn't know they did it and posted it. I just figured, okay, Steve Danneman, Terrence Chan, Shannon Elizabeth's there. So obviously they're going to probably interview those guys. And I busted out before those guys. So why would they have post mine? But they posted mine. So it's out there. I may have it one of these days. It'll pop up, because I do have my old hard drives. But the odds of me having it is slim. All right. So that's the story about that part of it and all that. So we'll talk about that another day. And that'll be part of the history books. Okay. Okay. Jeff Madsen, he's standing next to me. That's when the dude's like 19, maybe 20, maybe. I think that's it. And all these kids playing when they're 18 years old, their social skills aren't what they are. So he was a little freaked out. So I had to calm him down when he's at the Playboy Mansion. So that's why he's like, I'm not going nowhere. It's crazy up in here. So it's pretty funny. All right, let's go. Mo Better, Victor at Mo Better. That won't happen. It won't get there through either the Senate or House. The government is spending money they don't have. Yeah, but see, that's why unrealized capital gains, I'm down for it. Even though you're right, it won't happen. Victor, they'll just print more money. No. They can't. Well, yeah, they could. They better not do that, because we're going to have hyperinflation regardless. This is why in 3 years, if you don't make $200,000 a year somehow in your household, you're going to be screwed. Yes, Grand Canyon took our breath away when we visited. Is that when you were at the top of your game? What was your winning percentage? Again, it was 66%. 2003, it was in the 60s. 2003, 2004, 2005, 2006, and then in 2007, that's when, because if you're, I file taxes as a poker player, so you have to write down everything. That's why I know we had software that every time I play cash games, every time I play tournaments, every time I play anything with poker for tax write-off purposes and taxable income, I kept it, and then it gives you your win percentage, in the 60s, 2003, 4, 5, 6, and then when 7 came, like I said before, it dropped. It was like, even though, okay, you have to understand, 60 something is pretty high. So you're not going to really notice when it drops to like 50, right? Because that's still pretty good. But obviously, when I did my taxes, I was like, wait, let me go look at my thing again. It said 50. And I'm sitting there like, okay, we're still cool. So 2006, I think it was 3, 4, 5, 6. Yeah, 70s, 50. And then in 08, 40 something, like 43. Now, when it got down to 43, what started happening was that's 20 percentage points roughly. I was roughly like 66, 67% for like 4 years straight. It was always like that. So when it goes from that and it's a 2 year later and it's down to 43, you notice 20%. It's like now I play an extra, instead of having like 2 tables up, now I have 4 tables up. Because now you offset it when you play online. And then I didn't even like playing in real life because you only get 20 hands and I can only sit at 1 table. And that's hours. Whereas you get 50 hands when you're online per hour. So 200 hands per hour. And when you have even 60% clips, 50% clips, even 40% clips, you're still going great. But then the next year is when it went down to like 38, 36, or 35. It was something in the 30s. That's when things was like, wait, these kids who's been playing 2003, 4, 5, 6, they've been playing 5 years and they've been playing online. They didn't have to go through learning playing live where you'd only see 28 hands per hour. They got this. Some of these guys are playing 10 tables up. I mean, so they're seeing like thousands of hands per month. And then they talk to each other. They room with each other. Like the poker players at one time used to live at Panorama Towers in Las Vegas. It's by the Rio because that's where the World Series of Poker used to be. And it's on a side street. And so it was easy to in and out off the freeway, easy to get into Caesars or Mirage or REA when they built that. And so that's where they all lived at Panorama Towers. And so all these kids were catching up. And of course, all the pros were getting better too, because you're playing people with different games. So then I was like, you know what? I can't do this anymore. Well, I could, but I was like, I'm not gonna do this because instead of top 1,000 pretty good, now there's 5,000 people that can play real good. So your win percentages starts dropping. And this is another thing that I tell you guys all the time. It's money management is all it is. That's why I was trying to get one of the guys on that I used to play poker with, so we can talk money management, because that works the same way when you're investing. All right, so there you go. Here we go. Here we go, ladies and gentlemen. I went this hour long without getting to this, but this is on Mother Jones. This is down below. Look at what they say. Worried about Kamala Harris's plan to tax unrealized capital gains? Don't bother. Even if Congress goes for it and SCOTUS allows it, there you go. Hey, you're not worth 100 million. That's what I'm saying. That's what I'm saying. All right, here we go. Let's look at this. The link is down below. Do you have 100 million? in an asset class. This is the kind of deceiving. This is where the misinformation. It doesn't matter if you own $100 million, but you have $75 million in liabilities. That means your net worth is 75 million. You don't have 100 million sitting somewhere. All right. So this is how it works. Okay. I don't even have 50 million, which is why I'm not worried about the likes of President Joe Biden or maybe President Kamala Harris and Representative Lee, Warren, Wyden, Sanders, all who have proposed various unrealized capital gains. Oh, okay. Okay, they're right. This is what I've been telling people. Bottom line, straight off the top, your house is unrealized. But okay, let's see what they say. Maybe you do too. My wife and I bought our house in Oakland. Bought it. Oh, damn. They bought their house 20 years ago. It probably cost 350,000. And if they still live in Oakland, it's probably 1 point something. So they're going to have like 900 to $1 million worth of capital gains potentially. But the good news, they've owned the house past 1 year. Or is it going to go under the capital gains for a home situation where you can only do up to $500,000 as a family member? But anyhow, we'll get into that. Maybe not at all tonight. We also own shares of some stock funds that have appreciated over the years. The paper gains are unrealized, and you're not going to be taxed because we haven't sold the assets. Unless they are sold and profits realized, they won't be taxed under current law. That's correct. And it won't be taxed under if Harris did it. Either way, it won't be taxed. For the extra 28%, it'll be taxed at 15%. Okay, anyhow, this gives America's richest families a convenient way to avoid income tax. If you like our 1,000, we go. And paying capital gains tax at 20% plus a 3.8% surcharge known as the net investment income tax, you simply borrow against your holdings a few interest points tops. See, a few interest percent, 2%, 3% interest only for 10 or 15 years. Oh, yeah, that's fair. This is what I'm talking about right here. This is it. Guys like Bezos, Bloomberg, and Buffett, who needs the first names, take advantage of this tactic, which is why old Warren can accurately say he pays a lower overall tax rate than his second. Guess how many billions a trillion is? Shh. Billions, 1,000 billion, 1.9, 2 trillion, $2 billion on 1.1 trillion. Oh, and that's just the top 25. Do you really think these guys aren't going to pony up $28 billion? Seriously? Or now it'd be more than that. 280 billion? Seriously? Are you serious right now? So they only have 600,000 billions between them. Jesus Christ. All right, man. 1.9 billion on $1 trillion. Can you believe this? That's crazy. Remember, you gave them tax breaks. and more subsidies. And you gave them a PPP loan as well that you forgave. So who's going to pay the, what was it, $380 billion that you forgave? And guess where the top 85% of the PPP loan money went to? We're paying it back, ladies and gentlemen. We gave them forgiveness. So you heard me, tax cut, tax break, subsidies, PPP loan forgiveness over the last 7 years. All right. So we're paying all of it because they paid their tax. Let's just say they paid $2 billion a year out the top 25. Never mind. Let's get to the other 2,000 of those guys. So you can imagine how many trillions of dollars that these guys got away with paying less than $1 billion in tax. 1,000 billion dollars is $1 trillion. All right, so let's get into it. Several of the All right, guys. Well, I don't know how long I was gone, but I got down to something that was pretty interesting. Man, oh man. I'm sitting here making an argument for why we should do the capital gains tax. And here it was in this article. Where is it? Oh, good God Almighty. The Mother Jones article. There was a corporate tax attorney that was saying the same things that I'm saying. I was like, wait, what is this? It was at the bottom of the Mother Jones article is down below in the description box. Go check it out. All right. That would be greatly appreciated. I don't know what happened to my Mother Jones article. That's crazy. But you guys, just read it. Well, you don't have to just read it and then go to the bottom. I couldn't believe what I got cut off. So I don't know how long ago I got cut off. But there's an oligarch act that they tried to implement, apparently. So it's something which I didn't even know about. But there was a tax attorney, Bob Lord. I'm going to put this on the screen for everybody that is talking crazy. Here it is. Look at this. Bob Lord, tax attorney. Talk. Again, this is only the freaking 10,000 or less people. This is what they're going to say. Oh, don't do it, man. Give us our tax cut, tax breaks, and you guys pay for it. Bob Lord, a tax attorney. Wouldn't that innovation stifling argument apply equally to their realized gains and to their tax rates? He asked in an email. The logic would justify them having a negative tax rate so we could All right. I knew this topic was going to be bad. What you guys don't understand is when we do hot topics, because I explain things a little bit differently, I'm not going to go on CNBC because I'm not Mark Cuban or anybody. And they're not going to talk to me because they have different interests, right? Kevin O'Leary, all the billionaires have a different interest. They don't want to pay. And I'm sitting there going, guys, you have $1,000 million stacks. Are you serious right now? And actually, they're even in the other crowd. They have corporations, businesses, real estate, all sitting there worth $100 million or more. They've bought corporations, companies for $100 million or more. So you already know that's the asset value. That's why I'm saying they can't get around it. What, are they not going to buy corporations anymore? Come on. That's the thing. I'm like, how are you going to get around it? You're not. So, and like the tax attorney said, that's not going to stop them from buying anything. If you have billions of dollars and you say, okay, I have $2,000 million stacks, are you really going to care? Seriously, about 28 million when you got 2,000 or 56 million of your stacks when you're still going to have 1,946 left? Seriously? I don't think so. I seriously don't think so. I don't see how that's a thing. All right, let's go. Let's go. All right. Is poker more of luck or better strategy? All right. I don't get how you got outplayed by young pups with no experience. No, it's not experience. It's a mathematical equation. Every hand is mathematical. Your odds of winning every hand. So, let's just put it this way. If a person has a 10, I won't give you the cards or anything, but if a person has a 10% chance of winning, 1 out of 10 times they're going to win. Okay, so just keep that thought in mind. And then how many hands per hour are you playing? So if you're playing live, whether it's cash games or tournaments, you're only going to pay 25. It's 24, but 25 hands per hour. Out of the 25 hands per hour, how many hands are you going to play? So let's just say you play 10 hands. That would almost be aggressive, but now in today's game, that's normal. So let's say you play 10 hands, and out of those 10 hands, odds are in every hand. So just because I have, because when you play no limit, it's all in or not. But what I'm getting at is, let's just say what happens when the hand is 60-40? What happens when the hand is 70-30? 30% chance they can still win this hand. Every hand is separate odds. So therefore, if they're willing, first of all, not everybody knows if they're ahead or behind. And especially when a person is inexperienced, they will keep betting because they don't know that they're behind. They'll be like, oh, I'm probably winning, so I'll just keep betting the next card out. And so then you shove all in, they have a 30% chance to win, but now that 30% comes up. But let's just say the 30% doesn't come up, your 70% wins. Okay, 7 to 10 hands later, I'm in the same situation. I'm playing with another guy that I might only have a 60-40 advantage on this hand. We just so happened to bet a lot of chips. We didn't go all in, but that 40% comes. Now half my stack is gone because we got into some sort of a battle. We turned the cards over on the river, or before we hit the river. I'm happy because I look and see, oh, I'm ahead. But then in your head, you're calculating, oh, damn, that's 60-40. That's almost a coin flip. So he wins that hand. Now I lost half my stack. So every time you play, it's hazardous. So if you keep going, each table, if you play a tournament or cash game, the longer you play and the more people you play against, that means every time you have odds of losing. And if you have odds of losing and you lose 2 or 3 times only on a 20 30 or 40% chance that the other person can win, you're going to be close to extinct, either in a cash game or tournaments. That's all it takes. So the young guns who come to the table, and there's other factors that I've talked about before. Some of those factors are this. So like when I play tournaments and even cash games, I'm sponsored. So you have to remember, if I'm sponsored, I play different. If another guy, so here's I'll back in the day when the young guns were coming up, right? They used to live in their 3 or 4 bedroom apartment. They would literally have like gaming machines, their computers. They would be playing. Every Sunday used to be the biggest tournament, still are probably, where online there would be tournaments of 5 million, 2.5 million, where the winner gets like $300,000-$400,000, stuff like that. So these guys are playing all over the place because there's more than one poker room. So they're getting good, but the point is they don't need to have the best hand all the time. They just need that 30%, 40%, or 10% to hit at that time, 10% or 5%. All right. I mean, it's crazy. How about 2 cards in the deck can beat you? How about that? And it comes. Yeah, it happens. 2, well, that's 4%, but 5 or 4% a person. It's even worse when there's 1 card that can beat you and it comes. It happens. It happened to me several times. If you play poker long enough, you're going to see crazy stuff. Crazy. And so I'll give you a story. Crazy. I'm playing at SLS is what they call it now. Tournament. It's probably I don't remember the numbers. I don't remember anything. But all I remember is this. There's 2 tables to the final table. And I have, let's say that's 18 players. So I have probably middle of the road stack as usual, probably like I'm number 10 or 9 in the chip count. So how the betting comes out, it basically is 4 cards are up. The betting comes around where it's not 4 cards, 3 cards are up. Sorry, 3 cards are up. I have a straight, but my straight is something like, I don't remember what it is. Let's just call it, it's on the board is, let's just say 9, 10. And I think I had Jack, Queen. No, Queen, Jack, King. Nope. I can't remember. Anyhow, I had a straight, but the straight was just a regular straight, random cards, red card, black card, straight. On the board is 3 diamonds, Queen, Jack, and it must have been like a 8. 8, Queen, Jack on the board, diamonds. All right. I have a straight. I shove all in. This guy, unbelievably, is holding something like 8, 9 or some crap. And one of them happens to be an 8 of diamonds. The one card that can come in the deck, the 1 diamond comes. So now he's the chip leader and I'm walking out the door. Crazy stuff. I've had more than my share of that crap. That's why you remember those crazy things that happen. I'll give you one more. I'm at Binion's. And again, we're down to 4 tables. Deep, deep, deep. There's probably 80, 90, 100 players that were in it. So it's pretty deep at this point. We have chips. I always play with my headphones on, listen to some smooth jazz stuff, you know. And this guy next to me, I have gear. You know, I always have gear that I wear, hats or gear, some gear. So the guy next to me, I play aggressive. All right. The guy next to me, I'm the last player to act. He's in a small blind. He bets out. A guy raises somewhere before it comes to me. I have king. All right. So I raise as much as those two already raised. So total pot, I raise. The guy next to me looks me up and down and he re-raises me. And I'm like, that's weird. He didn't just match, he re-raised me, representing he might have ace. The other guy folds. Okay. Now, this guy, he's been playing with me for 2 tables. He always plays light. So I don't even think he has ace. So I shove all in. He turns over 7-7. I'm sitting there like, oh, this is gonna be good. This is gonna be good. Because I got a lot of chips. I'm in the top 10 in chip count. He's in the top 10 in chip count, but we never had a reason to battle each other. So, you know what comes? In 8, 2, 3, 4, 5. Actually, 3, 4, 5, 6. He gets a straight. I'm out because he had 2 chips more than me. Crazy. So the odds of him beating me in that hand, even though I have kings and he had 7s, it wasn't what you might think. It wasn't something like 90-10, 80-10. No, it's like 60-40 before any cards come out. A straight. And you can imagine what happened. Just like when the guy hit his 1-outer, you can imagine when the straight came. The whole room, because people notice when you have chips and you're one of the top chip leaders, the top 10, when you battle and you're both all in, people come and look, and all of a sudden it erupts. Everybody's like, no way. 2, 3, 4, 5, 6, 7. Seriously? Just like that. And the 2 chips didn't go well when I had to go all in next hand. But anyhow, this is why I stopped playing. I was like, I get tired of this crazy stuff. Are condos in Florida a good investment at 50% off? No. MEC, don't do it. Don't do it. There's a reason it's 50% off, because the 30-year certification or 25-year certification or 40-year certification is coming and has come, or it's coming in a few years. Either way, there's a reason it's 50% off. Do you want to pay $100,000 to $200,000 in special assessments? That's the billion-dollar question. First off, so you have to understand what's going on in Florida or other cities as well. Once you're the age of the building, that is 4 stories or higher, once it reaches 30 years, you're going to have an inspection. And 60% of all condos in South Florida are over 30 years old. That's just South Florida. Never mind about the whole state of Florida. So I'm just saying it's crazy. So all those condos, you're going to have to pay attention to. And not only that, You're going to have to find out before you purchase the condo, can you even get insurance? Because they're making condos get flood insurance as well. So you might can't even get insurance. Do you want to take that risk? So you're going to have to, this isn't just you can go down and buy a condo. You have to know what's going on with that building. When's the certification? How old is this building? Let me see the maintenance and upkeep records from the HOA for the last 20 years. Let's say, because I'm telling you right now, if the building's 20 years old, you might as well sell it. But if it's close to that 30-year certification, it's the prices are going to be 50% or below because they know the special assessment's coming up. Or does it already have the special assessment, which now means you can't even get a loan? Nobody's going to get a loan. No bank lender is going to give you a loan for a place that hasn't been certified, that's over 30 years old and hasn't done its repairs. You will not get a loan. So all of that is what's going on down there. Hopefully I've answered your question. There's a lot more to it. I actually made videos about this. All right. I actually made videos about it. So you can check it out. But if you want to ask any further questions, do so. But again, there's a reason they're 50% off. There's a lot of things going on. Property taxes are going up. Insurance is going up. All of them, they're adding some. Or your building may not even be insurable. Then what? You're going to have issues down the line selling as well. So your capital gains is the problem. So that's why the casino always wins. Exactly. The more volume, the better probability the casino comes up on top. Exactly. So how do you bankrupt a casino is the question. Asking for somebody that's done that. A candidate that is running for president has done that, right? It's impossible. That's why casinos rarely go out of business. The only way a casino can go out of business is if there's funds mismanagement. That's it. All games are rigged. Just so you guys know. Okay, I'll put it two ways. Games are not rigged, but you have less than a 5% chance of winning. All right, let's just use 5%. Everybody can realize 5% is a small chance. 5 out of 100. If you just say 5, if I tell you it's less than 5%, you're going to be like, I'm never going to the casino again. Just saying. All right, just pretend it's 5% so you can play. Because that's what people are doing. You're not playing to win. Because the slot machines are computerized. They're designed to drop. You put in 3, it drops 2. You put in 5, it drops 3. It's designed so you keep playing. And then sure, you put in 5, it drops 20. But then you keep playing because you're like, I'm just going to break the bank. It's going to happen again. So then they go back to the, you put in 3, you get back 2. You put in 5, you get back 3. You put in 5, get back nothing. Then all of a sudden you put in 5, get back 30. And you keep going till eventually you're going to be toast. Then once you're toast, then you're like, well, that wasn't too bad. I was getting a little back and I actually won some. And then you just go and pull out some more money and try again. Slot machines are all programmed, which means they're rigged. All right. The numbers, craps tables, the way you bet on craps, you have to take high risk in order to really win. But that high risk is in the advantage of the house. So again, you're going to ultimately lose the longer you stick around. And that's the other thing. A lot of people go to a casino, and for the life of me, I don't understand why they think they're going to break the casino. You can't break the casino. You can't take all their chips. But yet there's people that win thousands of dollars starting from a few $100, and they'll still sit there. 5,000 after they started with 300. Oh man, I was on a heater. And then when things start flipping back, no, man. Now they're from 5 back down to 4. No, man, I'm hot. Come on, man, let's go. No, man, I'm going to get it back. I'm like, back? You don't have nothing to get back. You already won. Don't give it back is the point. I mean, I had to argue with friends of mine like this while we're at the casino. They're up and they don't want to leave. And I'm up with them. And I'm saying, hey, man, we got a few thousand. What more are you trying to do? A few thousand in 30 minutes to an hour. What else are you trying to do here? This is fun. But now that we played for fun and want some money, let's go. Or at least quit this part of the tour. It's like I look at it like it's like Disneyland. But yes, that's why they always win. They can't lose. Now, I will say things are rigged. The reason I say things are rigged is because when you go play and there's people that want to play 21. So how many decks are in the shoe? The more decks in the shoe, the lower chance you have to win. Simple. Your goal is to get close to 21 as possible. Their goal is to see by any means necessary, as long as it's 16 or less, we're going to find out how close we can get to 21. You are at a disadvantage from the start. So you're playing 21, you have 18. Are you going to hit? Doubtful. But this is where the house comes in. They are going to either get 17, 18 through 21 or bust. You, on the other hand, don't get to get a free second card at 18 to see what happens. See, that's the advantage they have. So when they get 16 or less, they have to hit. If an ace comes, then they can go again. If it's an ace and a 7 and it's 18, they can stick or go. It depends on the game rule. I mean, there's all kind of rules that gives them an advantage. Are you going to hit 20? No, you're not. But the dealer now is going to roll up however many cards between 16 and 21. And the more decks there are, the more 3s, 4s, and 5s are in the deck. The longer you play, again, you're going to be playing hands per hour. And if you don't have money management skills, how are you going to win? Because I'm going to ask you guys right now, what if I'll give you a simple example. When people play 21, it's crazy. I mean, I can play the games because, you know, it's always fun to win, because when you play poker, you now read cards differently. You can actually look at the cards on the table. Now you know odds. You're like, wait, there's only X amount of cards that's left. And you know the odds. But that's a whole nother story. So when you're sitting there playing and I play, let's just say you're just a casual player, you bet $10. You do realize that's $10. You bet. So either the house takes it or you win. So what did you win? You won one more chip. See, I don't look at them as dollars. I look at them as units. One chip. I bet one chip. All I win is one chip. Great. So here's what most people do. They take another chip, which is one chip, and bet that chip. Now you lose that time. Now you're back to one chip, just what you started with, and you bet that chip. Again, you lose that time. Now you're betting another chip. Then you win. And what do? You bet one chip. But you're behind. So now you have to start thinking of other ways. So if you win, how do you win more? So then you, like I start doing things like, okay, I bet one chip, let's say, and I win one chip. But instead of betting one chip, I bet two chips. 5 free chip. One of the chips is free. The second chip is mine to begin with. So then now I have 4 chips. So there you go. So what do I do with the 4 chips? Take 3 back, bet 1 chip. That's one way to play. There's several different ways to play, but I just don't bet 1 chip. You have to increase your bets if you're going to sit there and play for real. And you have to pay attention to the cards as well. Even though you can't count cards, you should be paying attention, getting information as to how many cards, no matter what deck you're playing with, you should understand how many cards there are. If you stick with how many 10s or how many low cards under 5, either way, pick one or the other. You don't have to be brilliant. Just be like, damn, there's like 5, 6, 7, 8 came out. The deck's not done yet. There's 7, 8, 9, 10. Once you start adding things up and realize how many of the 5 and unders and how many face cards are in decks, you can pretty much be like, okay, heavily overloaded. All these low cards came out since 5 decks or whatever. It used to be like 3 decks. But anyhow, there's all kind of things. So that's what we do. That's why I'm selling side of option trading. Yep, I never buy contracts. I sell contracts. I'd rather be the casino. Exactly, Victor Marrero. Be the casino on all opportunities. And that's why poker is pretty cool, because you're not playing against the house. You're playing against other individuals. That's the thing. And when you play cash games or you play tournaments, you always pay a vig. So if a tournament costs, well, they've changed it since I've been playing, but it used to be a tournament, let's say it was $1,500 to enter. It would cost, the buy-in would be $1,350, or let's say $1,650, and then the vig to the house would be $1,400 or something, $1,350, whatever, something along that line. So then when you have 500 players and they got $1,000 plus each player, the house is doing awfully good for tournament play. So you can imagine when the World Series of Poker comes and you have 30, 40 bracelet events, some inside tournaments, and they're getting 10% of all buy-ins. All buy-ins, whether the buy-ins, the 1,000, the 5,000, the 25,000, the 50,000, the one drop million. I mean, you got thousands of players. And these guys are like, thank you for 1,000 here. Thank you for 2,500 there. Thank you for 5,000 there per player that just entered. All in the vig. Crazy stuff. Crazy stuff. Crazy, crazy, crazy. The house was jacking, winning. Man, you don't think they can't afford to do what they do? But that's exactly right. Sell the contracts, be the casino. Let everybody else take the chance. Why should you take the chance? Unrealized capital gains tax of 28, bad or good? We had somebody come in and say bad for sure, definitively. He's listening to the Mark Cubans of the world, the O'Learys, the rich guys who this would affect. But then when you talk to a tax attorney, he's going to go, why not? And especially the tax attorney that wrote the oligarch bill of 2023, which I didn't even know about. I don't think this passed. Because otherwise we would have heard about this. So, but anyhow, the tax attorney that helped him, he made very valid points that I've been making. When the rich guys go, we're not going to invest, we're not going to do this, I'm like, dude, stop. You know what that means? That means your game is over. That's the way I look at it. Your game's over then. So that means you're not going to be buying stocks anymore. So that means you're not going to be borrowing against the stocks anymore. Great. That means you're not going to be buying corporations anymore. That's worth billions, hundreds of millions of dollars, or billions of dollars, because that's going to trigger something. So what are you guys going to do? put your billions in a bank, that automatically triggers it as well. You're going to act like a drug dealer now and store it somewhere in a warehouse, cash. I mean, I'm like, what are we talking about here? You can't do it. You're out of business. Does that also mean now you're not going to do any stock buybacks? You're not going to trigger your 20, 30, 56 billion dollar pay package because you got the stock price to a certain number? Oh yeah, Elon Musk is what I'm referring to. That was his pay package this past year. Crazy for Tesla. And this is the same company taxpayers are subsidizing, giving tax cuts and tax breaks when he moves to Texas. Already moved to Texas, some of his operations. You gave him tax cuts and tax breaks, but they're giving him $56 billion in 1 year for pay. And the man has 200 and some odd billions of dollars of unrealized capital gains that he used. What was it? 20 billion loan against his stocks so he can buy Twitter. Unrealized capital gains. He actually used stocks as money so he can get a loan, because that was a down payment for the loan, where the banks go, okay, and by the way, we'll use some of that stuff as collateral too, in case, you default. So how, again, they're using it like hard-earned down payment money, like it's cash, and it hasn't been taxed yet. Wouldn't that be awfully nice if you got all your money from when you worked? Which this is just think about it. Instead of buying stocks, imagine you're working, which a lot of us are working, except for Victor Morales, he retired. But again, imagine all of us working. And the governmental system said, keep all your money. Okay? Those are going to be unrealized capital gains taxes. All right? Then you turned around and told 150 million working people, not you, but the 150 million working people, to give you a tax cut and a tax break. And okay, and by the way, since you are a corporation, we'll call you a corporation, we'll give you subsidies. So thank you for working hard. Here's your 120 grand, $100,000, non-taxable. We're going to have the other 130 million people pay for what we're about to give you. So congratulations. Here's some subsidies. Here's $100,000 worth of subsidies. Is that all right with you? And also, you want to do something, you say? You want to go start a business? Oh, we'll give you free land. You don't have to pay tax for 20 years. Is that all right? Because you're going to employ some people, right? Oh, yeah. We're going to employ, we're a small operation, but we're going to employ like 30, 40, 50 people at first, and then we'll get it up to like 500. Are we good? Yeah, that'll qualify. Explain something to me. How are you going to lose? How is that even a risk? Is that really a risk if it was reversed? So then, after you start your company, you have shares of stock. And those shares of stock are worth, I don't know, $10 billion, because you started the company, and so did about another 50 people, remember? They all have $10 billion worth of stock. So now you are a hot shot. You're buying the $25 million yachts. You're buying the $100 million home. And oh, by the way, next year, you still don't have to pay the tax for your company. You still don't have to pay tax because we're still going to give you subsidies the next year, and you still have your tax cuts and tax incentives again for the following year. But don't worry, we got the 130 more million people that they're going to pay your fair share of the tax you should have paid. And then the rich guys don't give a damn about, hey, government, we're running a deficit. Yeah. Don't worry about it, man. Y'all are more important. Don't worry about it. We're just going to have the plebes over here. We'll just have them keep paying the taxes until they run out of money. But you guys are good because you have stocks. You have unrealized capital gains, and you can use that as cash. So you're good. I don't think if I'm serious, man. Hopefully you guys can track what I'm saying. This sounds wild. If that was you, if that's how they treated ordinary working people and made them pay for your tax, let's put it this way, they paid for your property tax for 20 years. How would you like that? That's what this is equivalent to. And the money that you make, the 200,000, 300,000 you make, you don't have to pay no 40% tax. We just did a tax cut away. We lowered it. You only have to pay like 10%. Whoa, that's it? That's it? But then if you're Warren Buffett, you're like, come on, man, that's not right. I shouldn't be paying less than people who are working harder than me. You got to raise the tax rates. Come on, man, that ain't even right. And I have advantages that they don't have. So see, there's something to be said. So anyhow, I won't go too much longer, but hopefully I love the idea of doing it. As Victor Morero said already, the odds of this happening is slim to none because we already live in an oligarch situation. The guys who make the tax rules are the rich guys who lobby, give money to lobbyists, and lobbyists goes to the Capitol and they sit there and talk to them about this is how you avoid paying taxes, so therefore put a loophole into the tax law. And they've done it. Because if anything has been glaring over the last 10 years, some people don't care about integrity. Some people don't care about representing the people of their district and then aligning themselves with people who are screwing the districts because they're going to give them $5, $10, $20 million. Just like a third world country, you can buy your way into several different situations, and that's what they're doing. The Supreme Court is being bought. Well, not all of them, but a few. They put in their disclosures after they got caught that the rich guys who have court cases in front of them are giving them flights on free jets, sending them and their family and friends to $100,000, $200,000 vacation spots, hanging out with other rich people. So, and then they have it right in front of the court and they don't recuse themselves. That's what I just don't get this. This is just crazy. These are the type of things that you have to do. We have things in place to block it, but they're just ignoring it. So you're just going to vote. You're going to make rulings based on your friend's stuff. Yep. We vote for them. Meanwhile, thank you so much for that hunting trip that most people would have to spend 20 grand for. Thank you for that trip to Asia on the private jet that would cost people hundreds of thousands of dollars to go on. Yep. All good. That guy gets to vote for the case in front of me. My friend. Unbelievable. Unbelievable. So anyhow, this just, I love that she's talking about it. And I love that this is in the consciousness, because one day that is something that's going to happen. The unrealized capital gains tax. Now, if it was for ordinary citizens, which there is already, and I'll get to the one the tax attorney did not use, is the one I've always used, is that when I go buy a home and the special assessor says, hey, man, the home you just bought sold for $600,000 like 8 years ago, but it's $800,000 now that you bought it for. Their tax bill was like $10,000 a month. I mean, a year, but now yours is $14,000 a year. But why? Because you bought more. But wait, it's your assessed value is what amount? It's higher now. That's why your taxes are higher now. I'm just like, this is crazy. It's unrealized. I didn't sell anything. But if I did sell it, I have a $500,000 exemption if you're married, $250,000 capital gains exemption if you're single. But the house would have to go up to $1.5 million, over $1.5 million, before I would actually have to pay capital gains above that number. So, and if you're married, that's $500,000. So then you'd have to go to 1.25 in order to pay any capital gains at all. So that's the advantage of home ownership. But as far as my property taxes are, the next person in your neighborhood that does buy the house for 1.2, surprise, everybody else's tax bill goes up as well. Because you almost have the same square footage house and everything. So your tax bill goes up. What do you mean? That's unrealized. I didn't sell it. It only went up because this guy down the street bought his for 1.2. Then another guy, 1.4. My taxes are going up. People know what I'm talking about. Victor Marrero, I know he lives in a nice place because he gave us some of his HOA numbers and his insurance numbers. So I already know. He's in one of those places. If he bought a place like, let's say, 15 years ago or 10 years ago in that community, his home prices have escalated in Florida. So I'm pretty sure the assessor's office has been taking advantage of people. And then the insurance companies are taking advantage of people. So, and those are unrealized. And what's even worse, unrealized, is when you have situations like myself. When I live in a place where not now, but before, when I lived in a place where my daughters were over 18. And we have Mello-Roos, and in our taxes also are for schools. So even though we don't have children at school, we're paying for schools. So there's all kind of things that you can bitch about that you have been paying, and then you'll be like, wait a minute, I'm paying unrealized. Just because the dude up the street bought his house for more, why should I get penalized? And you're being penalized unrealized with insurance companies, because also they give you insurance based on how the value of the rebuild. They're not basing your insurance on the value of the home. It's based on, if something happens, how much does it cost to rebuild? That's unrealized. So you've been doing it. So why do you care about the 10,000 people that would have the $100 million? And actually, it's not even 10,000. So we'll just use that as a number. That's 10,000 that could possibly qualify. Out of that, I doubt if all 10,000 will. But why are you caring about $100 million cutoff? It would be like this. Let's just say, you didn't have nothing to worry about for your property taxes unless your house was worth 1.5 million. Wouldn't everybody be good? But see, our system can't work like that. So why is our system going to allow the guys who make the most money based on our hard work? Because once you realize it, they have to have employees. They're not doing this by themselves. You have to have employees. And so then I start saying, well, then then all of them who we give subsidies to and anything else, all of the companies have to give livable wages then. Otherwise, no subsidies, no tax cuts, no tax breaks. I mean, how come we don't have stipulations? You want to pay somebody $8 an hour or $10 an hour? No tax cut, no tax breaks, no subsidies. Call it a day. So then they'll turn around and go, well, just what they always said. If you raise minimum wage to $30, $20, corporations, we have to shut down. I'm like, yeah, a lot of corporations sure didn't shut down when they had all-time record high profits this past 2-3 years of in the billions, 20 billion, 30 billion, 15 billion, 40 billion profit, not revenue, profit. And they're paying their CEO and some of their board members hundreds of millions of dollars combined. That's crazy. That's real crazy. All right. Have you bought into any chip companies? NVIDIA, AMD, TSMC, SMH? Michael Anthony, welcome to the SSN Nation Friday night live stream. Yes, those are the ones, man. Just for starters. Then if you want to go with ETFs, you can always do some of that too. ARK has technology. Vanguard Group has technology. You can always do any of those. Just the standbys. High risk, high rewards. You can always go with a little high risk, high reward stocks, of course. But why? Why not go with the stocks that are the blue chips, and they're actually investing in to advance the technology, R&D. Apple's always good at tech. I'm anxious to see if they actually come up with their AI chip. That's what they're working on. I like that play. They have built-in customers. They have a brand all by themselves. NVIDIA, I'll probably do a video about it this weekend. The NVIDIA CEO came out and talked about his Blackwell coming out. He says all the corporations around the world can't wait till the Blackwell comes out. I know they can't because they're behind. See, that's it. Just think of it about an update. So people who bought their last version, who bought it a year ago, they're ahead of anybody who would have bought their last version 3 months ago. So now Blackwell is going to be another version, an upgraded version. And so it's going to be very interesting what happens. I know what's going to happen. Speaking of those unrealized capital gains, you don't think that NVIDIA, their first quarter next year, 2025, that they're not going to report over $30 billion of revenue for people buying their items, their chips, their software, their hardware? I think it's going to be more than 30 billion. Quite frankly, because all the corporations, the top 500 corporations who have trillions of dollars, 30 billion is like nothing. They're going to have to jump on board. More of these companies are going to have to jump on board because they're going to do the one thing that what stops a company from growing. The employment cost is the most expensive cost for a corporation or a company or a mom and pop business. It's what you have to pay for wages. So as soon as you can eliminate somebody that you pay wages to with an AI chip or robot or artificial person or hologram, that's what they're going to do. How much is that worth? And especially if you can advance the technology on your own, they're going to pay the hundreds of millions of dollars, or 50 to $100 million to get these chips and hardware. They're going to pay it because they can't afford to allow their competition to pass them while they're sitting there. This is almost like when computers first came out and you left your computer, come back a year later, and all your specs are outdated. So now the new people can do more than what you can do faster. And I used the analogy just the other day on Wednesday when I said I have a Note 9 phone. There's now, they don't even do notes. They just call them A20s or whatever, A22s or something. Those are faster, can probably do way more than what my Note 9 can do, but I'm never a tech guy. So people have advantages over me. I'll have this Note 9 till it dies. And that could be another 5 years. So I'm going to be way behind everybody. So if I need to catch up with somebody, I'm going to be behind as far as being able to use something. So hopefully that gives you an idea. Somebody else will chime in with the tech companies. Let me know what you're talking about. All right, Brian P., Mr. Dividends in the house. Did you hear what Victor Morel said? Welcome to the SSN Nation Financial Friday Night live stream with that icon next to his name, which I humbly appreciate. And he brings his tagline. Hello, Eric. I hope all is well with you. It is, man. We're making the best of it. Hello, SSN family. Very happy to see you, man. You got that news. Weekly payouts for Yield Max ETFs. How awesome is that? How awesome is that, ladies and gentlemen? Notice how this screen, we haven't been interrupted since I got off the Mother Jones. It's like somebody's watching. Michael, Anthony, I was looking at Wolf. Okay, since under 10, what's wrong with Wolf? And NVIDIA CEO selling shares every month and said this have no supply and shares will slip again and downgrade to 90. Hey, the information is key. You bet accordingly. So if you're betting on it going to $90, I can't even say whether it will or won't. There could be a dip because it all depends on the Blackwell project. He talked about it, but there was we don't know if it's real. I don't know if this information's real. Some people who are testing it right now said there's glitches. That ain't going to sell well if there's glitches. It's supposed to be released sometimes this quarter. So there could be something. So selling shares every month. Okay, let me explain. So Michael Anthony, you're an investor. You know that NVIDIA has a 3-year plan to spend $50 billion on stock buybacks first. Second, they had $7 billion from their previous stock buyback plan. So they have $57 billion over 3 years is what they're committing to buying their shares of stock. So if you are the NVIDIA CEO and you get triggered stock options, aren't you going to sell them? And also, if you have, I don't even know how many shares he has, but I'm assuming it's thousands, if not hundreds of thousands. So he's actually selling his shares, but then they do stock buybacks. So that has an equilibrium effect, if not more, because I don't think he's going to sell $50 billion worth of shares. So I think that means it's going to do what it always does when companies use stock buybacks. So we'll see what happens. But who downgraded it to 90? Are you saying you are? Who's downgrading it to 90? I keep hearing this 90, and quite frankly, it gets scary down there. 102 recently. It got down to 91 like a month and a half ago. So anything can happen with these tech stocks. If you were not around in 1999, this is what Yahoo Juniper, AOL. I can't remember. There's a bunch. Oracle. This is what they were doing this skyrocket ship for like 96, 97, 98, 99. And then all of a sudden, rug pull. Poof. Stocks lost 80%, 70% of their stock value. It was insane. That's why in Forrest Gump, Yahoo is the search engine. And now people are like, Yahoo, what are you saying? Everybody, the acronym, Google. Google. That there, it's for a reason. So NVIDIA CEO said we'll have problems with the fourth quarter, which still near 3 months away, and could miss earnings. Right. Because this is a typical consumer buy. The reason why is, why am I going to buy your old software when I know your Blackwell's coming out in the next 3 months? That makes no sense. Why am I going to buy last year's technology? So that means there's going to be a lag in the buy. And I agree with that. That makes sense. He should have less than 30 billion. Makes no sense. It's illogical. But nonetheless, there are going to be some companies that are going to take that sale price, right? They're going to sell it to other companies less, the older software, just what you would happen to when you get a computer or a cell phone. Same rules apply. And then, as Michael Anthony said, he's astute. You can see what he's writing. He's astute. That's why they're going to miss earnings. I agree. Well, it all depends if they're going to stay around 30 billion in that type of revenue number. I don't see how. A little less, I'd be willing to bet. Blackwell comes out fourth quarter, so then you're going to have a mad rush. So the first quarter of 2023 numbers should be back to good. But that's the beauty of the stock market, printing money. So again, Brian P's here. I think Brian P's the one that said he bought. Was it Brian P or Joe Nay? Joe Nay. Joe Nay it was. He bought at $91 a share. So he's good right now. But if it does go back down to 90 something, people should be buying it up. But thank you, Michael Anthony, because your points is exactly on point. This is what people should be doing, research. If you're going to invest in something, do research so you know what's happening. And he said in fact, he might as well just like be an analyst, because this is exactly what an analyst would say. They would say this type of stuff. They would be like, hey, man, they're going to come out with the Blackwell. Blackwell has a little problems. But that also means people are going to wait on the Blackwell instead of ordering last year's technology. The last year's technology that NVIDIA is going to sell is going to be cheaper. So that means their revenue has to be less. It makes perfectly good sense. But when Blackwell comes out, the mad rush, because it's going to be a better version than the previous version. So now you're going to have companies that's been on the sidelines jumping in. So I wouldn't be surprised if I saw something like 45 billion. I wouldn't be surprised. 35, I shouldn't say 45, but 35 to 40 billion. I don't see how they wouldn't hit whatever the analysts come up with, somewhere in that range. I don't see how they wouldn't make that number when they report. So I think when we go down the line, I think because Blackwell hasn't been released, it's only going to affect their first quarter earnings by a small amount. So I have to now backtrack, thinking maybe 30 billion, because hasn't been released yet. So is it going to be released in October? Is it going to be released in November? And what if it's released in December? So the second quarter of next year is going to be the real one that I think most people would be looking at, unless they release Blackwell in the next 2 weeks. Then you can actually make a go figure. But if they release Blackwell in the next 2-3 weeks, then yeah, they're going to beat the 30 billion number by more than 10%. So that's the way I feel. We'll see. Maybe Michael Anthony feels a little differently. But don't sleep on Rockefeller at Instagram. I see you. Sorry I mentioned you late. Powerman 680 Jenny 2024 or Jenny 24, J Cinny 24. Got to get it right. All right. By the way, anybody, make sure you go down below in the description box if you're interested in pre-construction real estate. We do things in Dominican Republic, no credit check, no qualifying, no barriers to entry to buy deeded property, pre-construction style. And there are only a few left if you want to buy something for $100,000, a one bedroom for $100,000 in the gated community with man-made beaches, salt water, Vista Cana beach clubs, 2 of them, 1 at each beach, fitness room at the Vista Cana Beach Club, the bar, restaurant. Also, you don't have to pay extra to use the beach, the man-made beaches. But one bedroom condo inside Vista Cana, $99,000 and up. A 1 bedroom that actually has beach view. These are Seven Palms Adventure. That's going to cost you $135 minimum, $135 minimum K. And the 3rd floor unit is going to be $145, $146K. Does not include appliances. So you're going to have to pay a little extra for that. But it has the man-made beach view. You have a cafe restaurant in your building. You walk across the street to the Vista Cana Beach Club, which has a restaurant, bar, fitness room. You have a pool, obviously, in the complex, things like that, but you also have a pool across the street. So, and then you have other things inside Vista Cana, like a sports complex, basketball, baseball field, soccer field with stands, sports bar and grill, tennis courts, skate park, pickleball courts, rock climbing. No additional fees. You only pay your HOAs. It's all included. The only thing you have to pay for is if you use the 9-hole executive golf course or horseback riding or take equestrian center lessons. Yes, they have an equestrian center inside Vista Cana. All right. So how's that for starters? Now, if you want to get into something a little bit more crazy, then of course you can buy a $300,000 villa inside Vista Cana or anywhere else for that matter. But you want amenities, I would hope. You're not just going to buy a villa and leave it, and that's just going to be in a random neighborhood, not even gated. But let's say it's gated, then what? No additional items for friends and family to go do while you're hanging out? I'm just saying. But, there's all kind of ranges. Just call it 99K and up. All right. Let's see if anybody else has anything else they want to discuss here. But I left it on the screen. Michael Anthony, thank you so much for the chip talk with NVIDIA tonight. We have people that own NVIDIA and AMD and TSMC and CMH. VTI is Vanguard Technology, but underperforms for some strange reason. Just saying. Then you have other things, the ARC technology funds, things like that with Kathy Wood. I don't know what that is right now, but do your own due diligence. All right. Some of you just came in lately, so I came up with the new SSN Lifestyle Old School Edition, because life is a box of chocolates. You just never know what you're going to be doing. And here goes some more SSN Lifestyle. All right, ladies and gentlemen, Grand Canyon, awesome. If you've never been there, go there. They also have a way now. I didn't go to the bottom because that's a day's journey on the back of some donkeys or horses. I'm not doing that. I don't want to be down there with sundown. It's chilly out there at night. I'm just saying. Um, so Victor Morel said he's been out there. If you've never been there, it is a sight to behold. And don't sleep on the sun going down. I wish I had some other, like I said, I got pictures somewhere, but there's a little tower that is built in a section of the Grand Canyon, and that's where people watch when the sun comes down, and it's an awesome sight to see. Awesome sight to see, and it's a long way. The trail, the canyon is huge. All right, it's not like I don't even think it's a mile. It's longer just to go down to one. You could be there for 3 or 4 days if you wanted to be. All right, it's spectacular. So just letting you know. And with regard to poker, I should give some guys some props because I put some props. I forgot to add something for okay, Jeff Madsen. You guys know he's the 2006 poker WSOP World Series of Poker Player of the Year. He went off as a young gun. Like I said, he couldn't have been more than 22 or something. The other guy, David Singer, who was doing the interview with me after I busted from the final table. But come on, there's me and 5 other professional poker players at the final table. And with 2 tables left, there was Lusk was at my table. Me, Chili, Locke. There was six at my table when we were down to 2 tables. 6, and 3 of us advanced to the final table, and so that meant Steve Dannerman, Terrence Chan. That's 5, and I didn't know the other black guy at the final table. I never seen him before, so I don't know if he's a professional player or not. But yeah, half the table professional poker players. Crazy stuff. Crazy stuff. So David Singer, I he interviews me for Card Player Magazine, and people I gave a preview on Wednesday. He actually won the first heads up that they officially had for poker players. I know, crazy, right? Crazy. When people said they won't show that on TV. Yeah, I know. In fact, let me just Google it. David Singer wins. I think it was the first. I think it was. Let me go look. Google it. I'll Google it. David Singer. Yep. David Singer, 25K heads up championship. Yep, that was the one. No. Let's see what happens. Defeating Elite Field. Yeah. Yeah, the first one. May have gone out in this round of the National Heads Up Poker Championship in March. Okay, so it wasn't the first one, but he lasted all 6 rounds in Full Tilt Heads Up Championship to take down 560K. So he didn't win the first one. I thought he won the first one. I guess that was it Andy Black? I can't remember then. If it wasn't him, it's Andy Black. But anyhow, Full Tilt 25K heads up championship 560. That's cool. More than the NBC, nope, more than the World Series of Poker heads up champion. So there you go. So I was wrong. So in fact, if anybody's into poker, here's who was in the field: Andy Block, Phil Ivey, Eric Seidel, Gus Hansen, Howard Lederer, Brandon Adams, David Benjamin, David Ockenheim, Huck Seed, Nick Schulman, the Nod Medic, which now is broadcasting, Steve Zolotow, Eric Lundgren, Eli Elezra. You'll see him on what's that cash game? Eli Elezra. Gavin Smith, passed away, great guy, always cool. Max Pescatori, Brian Hastings, Peter Feldman, Peter Jepson, Taylor Gady. All these guys that were mentioned are off the charts in cash game play and tournament play. Actually, they're all off the charts. That was the heads up. That's crazy. They were in the heads up field. Gus Hansen, too, when he was in his prime time. Huck Seed won the World Series of Poker. This is crazy. The lineup was freaking insane. So that just gives you an idea. So David Singer playing correspondent for Card Player TV. Alar looks like it may have bottomed. Hey, man, if it bottoms, that wouldn't be such a bad pick. See, I like this. Michael Anthony giving something that we don't talk about. I love it. I love it. I want to know, what do people think about what do people think about the Waymo? Did you guys hear about Waymo? Uber is going to start using Waymo. You guys hear about this? Let me know. What do you think is going to happen? Does that give a boost to Uber, or does that give a boost to the value of Waymo? Let me know what you guys think. What do you guys think? So, in fact, let me go look up Uber. I find this funny too. The reason why I find it funny that Uber decided to do exactly what everybody thought they were going to do anyhow. It's either one way or other. If Tesla came out with cars that could be used as robo taxis, remember the talk about people would buy the Tesla only to use it as a Uber, rent it out while you're sitting at home making money? Wasn't that the idea? And I find it hella funny. Uber has more money than all of their Uber drivers. So all they're going to do is just replace the Uber drivers. That is hilarious. But all I'm saying is, the only reason I say it's hilarious is because that's the inevitable game. Soon as there's driving, well, they already have it. I mean, it's out already. Whether it's going to be 100% accident free, that's not going to happen. But they've been testing it for years. So they're going to use them apparently. And I have to add this that I've said before. China's ahead in the robo-taxi department. All right. They're already doing it. People are on TikTok from China and they're showing you what happens. And touch screen windows is crazy, right? So here's how they do it. You know what's very interesting? What they did is, when we get our Uber or Lyft or any other InDrive, when we get our car and it comes and you're looking at the tag, but if you miss the tag because the car rolled around or passed you, now you're looking at the color, you're looking at the name of the driver, and the driver rolls it down, and then you have to give your name so they know it's you, and you're hoping to hear the name that you should. Imagine what they do in China. They have your window has a code on it. So it's just like on your phone, you tap on the window, the door opens. How cool is that? So both driver and you know the person with the phone or the person that's supposed to get in my car has a code. And they used it to get in my car, like an ATM pin. How cool is that? I was like, I was shocked. I was like, are you for real right now? Um, and yeah, you guys, it's out there already. And that's not the technology the United States uses. But the girl drove a few kilometers across town. I saw a girl do one. I saw a guy do one, and they're all similar. I don't even know if it was the same company or not, but it didn't look like the Waymo car. Let's just put it that way. So let me know what you guys think about that. Um, let's go. It will help both. Yeah, Brian P. Well, here's how it works. Waymo's private. So now is Waymo going to go public? That's the question, right? Or are they just going to sit back and say, thank you for your orders? We don't mind you ordering because that's what we care about. We don't want to deal with stock market reporting or anything else the way we would have to. Clove. That sounds interesting. Have you looked at Clove? Yeah, not recently. So not invested in Clove. So that's $2.99 now. Wow. Okay. That's interesting. Very interesting. Because those things used to be, it still is. Oh, it's more than yeah, it used to be down to $1, but it used to be a lot higher. What happened with Clove? American Health, Medicare research scathing short report on super microcomputer. Oh, that's 2 days ago. Trading 6.4% higher. Yeah, all of a sudden there's a bump. A profitable future ahead, fueled by AI and star rating success. Woof. I don't know, man. In this day and age, I like dividend stocks more than I like anything else. Because you don't know which way anything's going to go in reality. Tesla's at 230. United's at 594. United Health Group. Nvidia 119. That popped up from 102 like a week ago. NASDAQ also. S&P 500 and NASDAQ, I believe. Yep. Best week this year. So that's not bad. All right. Have you looked at AAP, which auto parts? No, I'm not really a stock trader like that. I'm more conservative. Dividends based on real estate investment trust is what I recommend. So I'll talk about that, but I'm not really a financial advisor. But it's because of the interest rates are going to come down. So these real estate investment trusts are going to refi their properties at a lower interest rate. So that means there's going to be more profit on the table. So dividends should still be coming. Hefty ones. What's this? Sold off, but have many deals. Yeah, exactly. Michael Anthony, like I said, our man Gino Scimiente, he used to tell us how he operated 20, 25, 30%. I'm in, I'm out. I just do that all the time. I can buy back in later. That's all he looks for, short-term 20, 30%. In fact, he would have sold and resold NVIDIA over the last 6 months several times because he would have bought it he would have bought it to 91. Then when it went up $20, $30, he would have sold. He would have bought it 102. So when it went back up to 119, or if it went past that, 120 to 125, he's selling. So he would have, 60% gains, 20 or 50% gains in less than half a year. I mean, this is what he does. But other people, keep it in the long term. Nothing wrong with that because I expect Nvidia to go higher than what it is now. But if you can buy at 90, like Michael Anthony's suggesting, that would be awesome. That'd even be better because then if it does go up to 200 or 150, like a lot of people say, then you would have to make your decision. Is 90 plus 70 good enough for you? I mean, damn near 80%. I mean, it's a lot. I mean, come on now. That's a lot. If that happened, I mean, you have to plan your exits, money management game, or are you just going to keep it for 20 years? AAP, I'm not familiar with. AAP pays dividends, auto parts, advanced auto parts, the best 52-week low dividend stock to consider. Yeah, but there's too many other things out there. Too many other things out there. This is giving only a 2.41% dividend. So why not just go with ET Energy? One of Brian P's favorites. When you're getting 7.5 to 7.5 to 8%. And it's an energy company. So why not go with those guys if you're going to go with this type of even that stock is $41 a share for a 2.41% yield. And we're talking about auto parts, which I guess there's always going to be a market for it. There's millions of cars on the road, but sooner or later, they're going to have to scale down stores, whether it's going to be AutoZone, whether it's going to be Advanced Auto Parts, whether it's going to be Napa, it doesn't matter. They're going to have to scale down. Cars do not break like they used to, and trying to work on cars that are 40, 50 years old is very, very hard now because of the way the auto parts industry has changed. Remember, you used to be able to walk into the auto parts store and pretty much get everything you need. Now they're keeping a central warehouse or they're stocking short, and they'll say, oh, it's going to come over by 2:00 today. They have people driving from one store to another, so they are not stocking up each store. And if you don't have it in each store, then it's at some regional warehouse, which will come to you in 1 or 2 or 3 days later. But nonetheless, that's how they operate. It's not the same. So I'm not a big fan of the auto parts industry, but we'll see. People always need parts for their cars. That's it exactly. But the thing is, newer cars are built different. They don't break down as quickly as the other ones, but I understand your point. There's millions of cars sold every year, which is a nationwide. But in the territory of, let's say, a state, how many cars are older? Because look, I'm just like everybody else. I would hope when a car gets older, let's just say it's 8, 9, 10 years old. As long as it's still driving fine, you're good. But let's say it's 12 and all of a sudden, there's a repair needed, and the repair is nowadays, you don't know what it could be. It could be $1,000. So then you start going, well, how much is this car even worth? So, and then, a year in between, a year later, another something happens where you have to replace some joints or axles or, heaven forbid, if it's a transmission something problem. So somebody tells you $4 or $5 grand. So now it's like car's worth 10, 8, 12. Am I going to pay $4 or $5 grand to fix it? And then it keeps going. So then it's almost like, well, it's almost worth going to buy a $30,000 car certified and roll and have warranty and coverage and maintenance for 5 years or 6 years. So that's how I do it now. I just, once the car starts being starting to cost me a lot of money, repairs start happening, but cars are built better now. So they're going to last longer. But that doesn't have anything to do with it because the cars that are 15 to 20 to 25, 30 years old, 40 years old need parts. But again, with the advent of online, shopping, you can go online and buy the part and have it shipped to you next day or the day after. Or so it's not like this thing where you have to wait a week. You can just say, hey, we'll ship it there same day in some occasions if it's Amazon. So that's what I'm trying to say. They're going to go up against situations in the future, I feel. And are we really going to have to man people? I mean, how many people are going to have to work there? That's the other thing. So it's kind of I don't think it can go automated, but I think there's going to be a problem because it's costing you money to store inventory. This is why brick and mortars and malls and all that don't work. It's hard for them to work when people can press buttons, look online, get what they want in the comfort of wherever they are, and then it shows up same day or in 24 to 48 hours. That's hard to beat. You order, go on about your business. Now you don't have to get in your car, drive 15, 20, 30 minutes to a shopping area, go look at something. They don't have it. Oh, but our store over here has it. Okay, can you ship it over here? Yes, but that won't be here for 3 or 4 days. Well, by then I could have already ordered it from online. This is the Walmart. This is why Walmart's ultimately going to have a problem, in my opinion. Well, they kind of have a problem, but they're trying to rectify it by being more like trying to be Amazon online. But that thing about holding product in a store, that's like a albatross around your neck because people are used to ordering online now on their phones. So it's almost like, why go to the store? You can order groceries now too. So that's why grocery stores are going to have a problem, so to speak, but not as bad as auto parts. So we'll see what happens. But no, I'm not doing none of that auto parts at all. Have you noticed that all oil near lows and many oil stocks selling off until today? Yep. Exactly. That's what's going to keep happening. Because once again, you have to understand where we're going. This is traditional. These are commodities. Everybody knows it's almost after school or when kids start going back to school. Now all of a sudden you start going, hey man, did you already get your heating stocks, your light, your oil, the light oil? Because that's what's going to be in use starting now in some states. So for the heating oils are going to cost more because it's winter, spring, fall and winter. So this is what's going to happen. You have MNRO, and you must consider what type of parts they sell with dividend. That's exactly right. You have no choice. That's another thing. Just look at the run that Mod done since under 20 and now 110. I'm not familiar with Mod. I don't know any of these. I'm not. Let's go look. I'm not into any of these. Modine Manufacturing 111. Thermal Management Company established in 1916. Jeez. Modine, who patented the Sparex radiator for tractors, turbo tube radiator for Ford Model T. Okay. Yeah, let's go. I'm not going to show it in the background, but 1 year, 145. So they must have more than just what they're saying. But now what are you going to do after it goes from, in 1 year, it goes from what, 40 something, $45 to 111, 2.5 times. That's pretty wild. 52 week, 38.50 low, 52 week high, 123. Now, how are you going to invest in that? That's very interesting. Manufacturing Mod. Okay. All right, ladies and gentlemen, that's pretty sweet. Well, you guys got to write these down. That's why you have a pen, pad, and paper, because here comes Michael Anthony, and he's dropping all kind of things that we rarely talk about. Mod doesn't even pay a dividend, still have upside to 125. Hey, it didn't have to, right? Hey, why not take the appreciation on the stock? Hey, nothing wrong with that. I like it. All right, ladies and gentlemen. Well, the unrealized capital gains tax, I didn't get much feedback, a lot of feedback as I anticipated, but I got a few. And it's like the one person, Mo Better, said bad. Um, Again, some people would say good, like me. I want to see people who are holding $110 million worth of stock or worth of real estate. Yeah, I want to see them pay 28% capital gains. At least it's not 40. At least it's not 50. Just saying. So I don't mind seeing that. And at the same time, if you can cut off those tax cuts and tax breaks, that'd be nice. Stop the subsidies, that would be nice. And then maybe taxpayers have a chance. Maybe you don't wipe out the middle class like you've already done, and maybe you don't wipe out the other upper middle class in the next 3 years. So again, if you came in on the tail end of this, your household income is going to need to be cop season. I see you on Instagram. On the tail end of this, you need to have $200,000 household income by 2027. That's your goal. So that's why we have to talk about buying assets that make sense. You can't take risk anymore. So we've taken risk this whole 5-year time. We did stocks, we did crypto, we did tokens. Even InstaVid AI hasn't been fulfilled for that, even that investment I made with that. Miracle Cash, done. Debt, well, not done, but they're still doing all kind of stuff, not making money. Then we have, what was that other one? Several crypto projects, Miracle Cash being one of them, crash and burn using a little cash that you can use. But again, nothing turned into the behemoth other than YieldMaxETFs.com, dividend stocks, because they were low in price, which gives them a great yield that people were able to get double digits in yield, 10, 12, 13, 14%, and appreciation prices from some of these stocks like NVIDIA, AMD, TSMC, and a few others from 2021 with the chips we were talking about. There was all kind of chip stocks in low $10, $20, $40, $30, 10. It was in that range. You could have bought all of them, even NVIDIA. So this is the thing. You have to think what the future is going to be, and we'll go from there. All right. Well, I'm going to wrap this up, Michael Anthony. We'll see. Let's go. MRNO. It also offers services for brakes, mufflers, and exhaust systems, and steering, drivetrain, suspension, and wheel alignment. It operates under the brand names of Monroe Auto Service and Tire Center, located in certain parts of the USA. Yeah, that is going to be very interesting. The only reason I say that is because any auto repairs and things like this, even the unknown mom and pop businesses, they have to charge because it's simple. All parts cost a certain money. So therefore the repairs, somebody's going to say 150 an hour. Somebody's going to say 100 an hour. Somebody's going to say, so it's up to you. And quite frankly, this is again, the thing for me. That's why the longer you can have maintenance covered on your vehicle and you have insurance and things like this, then the longer you'll maintain your vehicle. You'll have a car. And if you're going to have a car that's free and clear and it's 10, 15 years old, no reason to buy. And if you have to go get something done, are you going to go to Monroe or are you going to go to the local guy down the street? I don't know. Yep, Monroe Shocks. Exactly. All right, ladies and gentlemen, we're going to cut it out. It's after midnight. Thank you so much for being here. Hopefully I'll see you on Monday night at 8:50 p.m. And once again, make sure you peruse through down below in the description box. If you're on YouTube, peruse through there, double check any links you could use. The link to the article that I talked about the unrealized capital gains from Mother Jones while we're getting disconnected like normal. Check it out. Get your free stocks from Robinhood and Webull if you haven't yet. Also, go and get some other things. If you're into crypto, then you should get an unstoppable domain. What's that? Just go use my link down below, please. And you'll see you can have for ericbird.crypto, for instance. If you're sending me crypto, I can just give that to you, ericbird.crypto. It's that simple. And you send the crypto there. It handles over 340, 350 of the top coins and tokens. So I don't have to give you the alphanumeric character. Stopstrugglingnow.crypto. I don't have to give you anything other than stopstrugglingnow.crypto. Pretty simple. And for one-time fee, no annual fee, no other fees. Free to mint it on the blockchain. So go down below, get the unstoppable, use it for you. And if you're one of these people that just want to set it and forget it, you can always go with Wealthfront. You could have money in Wealthfront earning over 5%, but it's like an ETF also, where you can actually make money, and they actually manage it free for you if you have $500 up to $4,900 in your account. Is managed for free. So as it goes over 5,000, then they start charging an annual expense fee. Pretty good deal, I would say, if you just want to set it and get it that way. And if you want to do high risk, high reward returns, such as 30, 40, 50, then you go check out Yield Max ETFs. And that's percentage I'm talking about. 30%, 40%, 50% or more. So just think about that. Okay, all in your hands. Do your studying. Looks like Michael Anthony's out here doing it. Looks like he's out here making it happen. What time? And don't you look at chart to know top buy or not? No, because I don't like trying to pick stocks in this environment myself. I don't do that. What I like is dividend stocks in this environment. The reason why I'm saying that is because you can get 13, 14, 15% on dividends every year. Your stock appreciation, can they keep going 13, 14, 15, 16% every year? Separately, when I pick a Monroe, let's say, sure, it's had its nice run, but 14% more, it can probably do. But I just want to lock it in. So that way, every year you have it coming at that rate of return. So that's the way I look at it. So I don't try to pick bottoms and tops. That's for me, very dangerous. For you, maybe not. And that means you're doing a lot of studying too. But for me, I'd rather have the ETFs at this point, the JEPI, the JEPQ for JP Morgan ETFs, 9.5 to 10.5%, depending on when you buy. And why not? Right? So it's things like that. So I'll say ARR, ORC, IVR, all high risk. The ones I just mentioned are high risk, especially IVR and IEP. Those are high risk. You like 20% return, they're high risk. 18% return, 17, 14%, that's high risk. Now I say ORC, Real Estate Investment Trust, PSEC, AGNC, ARR, NLY. Check those out. And you might see somewhere between 12 to 14 or almost 15% dividend return. And those are real estate investment trusts, meaning it's backed by real estate that they buy. So that's pretty good. All right, HPE. Oh, the old HPE looks undervalued since they're buying Juniper. Wow, Juniper, which HPE beat and raised outlook and pays a nice dividend. Oh, there we go. HPE buying the Juniper networks. Wow. Old school stock. Tech stock. Hewlett Packard. Almost worked for Hewlett Packard. 3% dividend for Hewlett Packard, but they have a low dividend because they're trying to have a nice upside. Well, year over year, not too. I mean, it's almost level. 5 years, still almost level for Hewlett Packard. Yeah, I almost worked for Hewlett Packard, as I told you guys. Well, maybe I didn't, because that's the interview that I went to where I told the story before where the guys were telling me I have to wear certain color suit, 3 different colors. I believe he said blue, gray, black, I think it was. And shoes I had to change, and tie I had to change. And it was wild. 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 All right. We're going to wrap it up. All right, Michael. Thank you so much for your input, man. But I'm about to head to bed. HP sell to NVIDIA. Okay, you're going to have to convince me why NVIDIA would buy Hewlett Packard. You're going to have to convince me on that one. I'm sure they can gobble them up. And if you listen to earnings call, they talk about their AI and backlogged and NVIDIA orders are. There you go. Since CENX is like AA, but Sync's fundamentals are better. Really? You sure about that? Damn, a lot of homework. A lot of homework, man. 13, 14, 15, $13.64 Century Aluminum Company. And you guys know, look, we talked about Alcoa 3 years ago, right? Here's Sync's. A year ago was, wow, 79% return. A year ago, it was $7.59. So it's $13.64. Now, winners for a lot of people. It went up at the end of last year. It started going up. Okay, Central Aluminum, U.S.-based primary aluminum plant in Kentucky, South Carolina, and Iceland. It's the largest producer of primary aluminum in the United States. Wow. That is interesting. Very interesting. Very interesting. Yep. Very interesting. Because even this year, Alcoa Corp came down. That actually is an interesting stock that you mentioned there, CENX. That is interesting over this last year. Century Aluminum Company. Interesting. 79.71% return on the stock appreciation. No dividend yield, it doesn't look like. But being the largest aluminum company plant in America does have its advantages because the competition is out. Ball, what is it? Ball is also a company that does aluminum, but they only do specialized cans. All right, Michael, I got to run, man. I got to go. HP sells to NVIDIA and dividend better and low PE compared to NVIDIA. Price to earnings. Oh, I see what you're saying now. Okay. You're saying Hewlett Packard sells chips, or what do they sell? Okay. I misread. So you're saying HPE sells to NVIDIA and dividend is better. Yeah, because NVIDIA is 1%. And low price to earnings compared to NVIDIA. Yeah. But I don't understand why Hewlett Packard has always been underperforming in my stock. NVIDIA pays a penny dividend. Is it a penny? Oh, I thought it was 1%. Thank you. So the 01 was 1 penny. That's funny. That's funny. All right. Yeah, I didn't say NVIDIA is buying HPE. I got you. All right. No worries. I know, being 68 years old. Exactly, man. Yeah, you might as well just chill out. That's a lot of work you're doing. You just dropped some names of a few companies here that a lot of people should probably be looking at if they want to buy individual stocks and let them appreciate. Like I like aluminum companies, Sinks. I didn't realize they were number one, but there's always a need for aluminum. And the industry has consolidated also. So that's another thing. There's not that many aluminum companies out there. So when you find yourself in that position, you're going to have appreciation, which is what happened. Okay, here we are. These companies never get noticed, and CNBC talk about big tech stocks only. Yeah, exactly. I like the CENX. I really like that aluminum company being the top dog. There's something to be said about buying the top dog company with less competition, because that's basically what we're in. We're in the industrial revolution, as the NVIDIA CEO says. This is like 1860 all over again, with the oil industry, the railroads, the transportation industry, and then the car industry popped up in the late 1800s. Crazy stuff. Crazy stuff. So again, thank you for sharing all this information, Michael, Anthony, and hopefully we'll see you on the Money Making Monday live stream, and dropping some more of these for people on Monday. And I'll have to go through this and check it out. HP also makes supercomputers like Dell and software and other products. This is true. This is true. This is very true. But they don't get the love. They don't get the love. In fact, Hewlett Packard's never got the love. It's same as Dell. Everybody picks their ones, and they have every right to, because they're the ones that the appreciation is off the charts. All right, man. Well, thank you so much, everybody, for being here. Thank you, Michael Anthony, for being in the house. Hopefully, I see you again on another live stream. And don't forget to check out the latest videos about Florida, the condo market, because we did have a person thinking that 50% off on a condo was a great deal, when in fact that condo is probably 20 to 25 years old, and they're just trying to get out, or the certification is already started and they know that certification meant, hey, you got to spend $10 million, and it has to be shared by the owners of the condos. So that's why they have to leave, because they have six-digit figures special assessments. So these are the type of things happening, and there's a lot of units that are 30 years or older in Florida. Just keep that in mind. All right. Don't play around. All right. CX makes cement and sells a lot of it. Yes. This was a company from 2021 when there was a shutdown that we were talking about at that time. I remember. We kind of know who they are, man. Let me go look. I know who it is. Nobody's talked about this in a while. Let's see what's happened. Wait, what is this? I thought it was CX. Interesting. Dividend 0.69%, but I don't remember the dividend part. Let me go back and see what happened over 5 years. Oh, we don't have anything that's happened good. Oh, wait, hold on a second. That was only one. Oh, yes, we do. 2020. Yep. Okay. Yep. 52%. So, yeah. New York Stock Exchange, CX. Yes, we were talking about that back in the day during pandemic situation, because it made perfectly good sense that it would spring up. But I see it came back down in 2023 to 393. Interesting. That was in October. And then now it's coming back down. No, it's 601. So, hey, it is what it is. It's going to stay where it is. Okay. Hold on a second. What's this? All those homes need slabs and need cement. Exactly. See, he's very smart. This is what we're talking about. Makes cement and sells lots of it, which in Mexico, and I guess have plants in the USA, which sells lots. And sells lots. I don't know what CA, California. Well, there you go. I mean, that's the other side of this. When they start certifying in Florida, they need cement. It offers cement, ready mixed concrete aggregates, urbanization solution. Yeah, we know who. Well, a lot of people don't. I haven't talked about these in like 4 years, CX, because we were talking about everything that's going to happen is what you're talking about. Why there's going to be an influx and use of the cement because of the Florida situation. And Florida's not the only one. There's other states that have built concrete places that are 30 years old. They're deteriorating too. So it isn't like it's just Florida. This is part of life with concrete and rebar. especially around salt water and high humidity locations. So this isn't just a Florida thing. It's going to be an Alabama thing. It's going to be Louisiana, Mississippi, Texas, all these Gulf Coast coastal states. They're all going to have a problem. 20 years is about the lifespan in reality, as people are now looking at these uh, projects in Florida that are 30 years old. They were like, this thing needed to be fixed like 10 or 15 years back, shored up, but they didn't. So who's going to start building or worrying about shoring up something when the building's only 15 years old? Because everybody looks at the stats and it says, well, cement, it should last for 50 to 100 years. So surely 15 years, there's not going to be a problem. There is. And water is your worst enemy. Because if you have a leak and it starts leaking into your cement, that's bad. All right. So those are the things people don't realize. Okay, let's see. Let's go. It's bottom this and going back up. Ready Mix, which Lowe's and Home Depot sells lots of that product. I'm sure they are. All right, we got to run, Michael Anthony. I appreciate you being here. It's late for me. So everybody else, thank you so much for being here on this Friday night. And again, please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here, and it's going to get harder for everybody. 70 to 80% of the population is living paycheck to paycheck. The middle class, wiped out. Now they're coming for the upper middle class. Why? Because you have to pay taxes, not only for yourself, but for those tax cuts, tax breaks, and that interest on the deficit. The grandkids are, or the great grandkids are. But either way, that has to be paid back. And since they can't pay the $1.2 trillion a month in interest for the deficit, that means they're going to be printing more money, which is the definition of inflation. So you have 2.5 years to make more money, buy investments that make money for you. So then this way you get there. All right. Okay. I know a lot about companies, and CNBC only talk about tech stocks, only that 110. And I like Dell, which earnings and dividends much better than NVIDIA. Dell, I don't even understand how they don't talk about Dell. That's like the hidden monster. He's exactly right. It's a hidden monster, but he gets no love like it should. It's really a hidden monster. They are doing all kind of things behind the scenes, which is not really behind the scenes, but within the computer tech industry. It's 114 for Dell right now. 52-week low is 63. 52-week high is 179, which goes to show exactly what I'm talking about. The old EMC corporation that was on the RAM. It cracks me up. Oh, that's funny. Brings back memories. I used to be like this computer geek. All right. So that's it. We're going to wrap up, ladies and gentlemen. Good night to you and everybody. I love you guys. If you ever need any help, make sure you hit me up at support@stopstrugglingnow.com. If you want to join our WhatsApp group, it's a random discussion. It's not really any real discussion other than when somebody says, what about this? Or what do you think about that? But I'm putting it in the chat room. And I'll put it in the chat room on the Instagram, Twitter, and YouTube. Cope Season joined us. Everybody else watching, I'm glad you're here. But see us on Monday, 8:50 p.m. Eastern Standard Time. All right? And make sure you stay safe out here, because a lot of people under stress and duress. So make sure you don't contribute to their stress and they don't contribute to yours. So just be in safe spaces the best you can, but you just never know. So just be careful out here. And with all that said, keep your head up, keep moving, and I'm out.